Welcome to Finance Deep Dive. Today we're going to talk about something you might be hearing more about, the global poly crisis. We're going to unpack how this perfect storm of world events is directly impacting the US economy and, yeah, ultimately your wallet.
So in this video, we're going to break down exactly how this tangled web of global events, everything from trade disputes to faraway conflicts, is creating some pretty powerful and unique economic headwinds for the US.
You're going to see how some major disruptions in global trade are having a direct and, let's be honest, often costly impact on the prices of things we use every single day.
Okay, let's just dive right in. What does this term polycrisis actually mean? And more importantly, what does it mean for the global economy and for your financial life?
Right. So the first thing you've got to get your head around is this isn't just one crisis hitting us. Nope, it's many overlapping, interconnected problems all hitting at the same time.
And that right there is the key. It's this tangled web, this combination of trade issues and global conflict that creates such a uniquely challenging economic environment. It's not one thing, it's everything together.
So how does this polycrisis actually play out in the real world? Well, our first major pressure point is trade policy. We're talking specifically about the aggressive use of tariffs. That's basically a tax a country puts on imported goods to make them more expensive.
I know what you might be thinking. A trade war happening over in China? How on earth does that affect the cost of a home here in America? Well, the connection might seem distant, but the data shows a link that is surprisingly direct and honestly pretty expensive.
Yep, you are seeing that right. Those tariffs placed on key construction materials, we're talking steel, aluminum, and even lumber from Canada, have added nearly $11,000 to the price of a typical new home.
And this is so important to understand. These tariffs aren't just paid by some foreign company. Think of it more like a tax that U.S. businesses have to pay first, and then guess who they pass that cost on to? Yep, it's us, the consumers.
So, in response to all this, we're seeing this massive shift that some people are calling the Great Reconfiguration. Businesses are scrambling to move their supply chains away from China. Now, long-term, that might be a smart strategic move, but in the short term, it's causing all sorts of destruction and, you guessed it, price hikes.
Okay, next up, let's look at another really important piece of this polycrisis puzzle. How conflicts happening thousands of miles away are creating these huge bottlenecks in global shipping and in the energy markets.
And this is just a perfect example of that chain reaction we're talking about. It all starts with these regional attacks in the Red Sea. That forces massive cargo ships to take the long way around Africa, which adds almost 2 weeks to their journey. And what happens when a trip gets that much longer? The cost just skyrockets. I mean, just look at these numbers. It is pretty wild. On some of these absolutely critical shipping routes, we're seeing costs jump by an incredible 200, even up to 400%. That is a massive increase that eventually gets baked right into the price of pretty much everything we buy. And it's not just about shipping goods. The energy markets are super on edge too. The price of oil is incredibly sensitive to any threats in key waterways like the Strait of Hormuz, while at the same time, soaring global demand for U.S. natural gas puts pressure on prices right here for us at home. So, with all of this chaos and unpredictability in the world, you have to ask, where does the money flow for safety? We're talking about what are called safe haven assets. And, well, the answer to that question is getting a little more complicated.
Now, this is where things get really interesting, because you can see this tension playing out right here. The US dollar, it's still the king, right? It's the traditional safe place to park your money. But all this unpredictable trade policy is making some investors nervous, and that's pushing them toward alternatives, like gold.
And you can literally see that nervousness in this number, a 50% rally in the price of gold. That shows a very real search for stability outside of the traditional currencies, especially from big players like central banks around the world. However, and this is a big however, there is one major stabilizing force for the US economy right now, and that's the tech sector. The incredible AI boom is continuing to pull in huge amounts of investment capital from all over the globe, which helps support the stock market, strengthens the dollar, and funds innovation that boosts productivity.
But while all that capital is flowing into tech, other really vital sectors are feeling the squeeze. So let's bring this all down to the ground level and see how this complex global picture is affecting American agriculture. American farmers are really caught in a trap right now. Their costs for things they have to buy, like fertilizer, are going up. At the very same time, their revenue from selling crops overseas is going down because of all these trade disputes. It's a squeeze that could eventually mean higher food prices for all of us at the grocery store. And this squeeze is being driven by that same perfect storm we've been talking about. You've got sanctions on fertilizer from Russia, export limits from China, and these retaliatory tariffs, which are basically taxes other countries put on our goods that hurt U.S. corn and soybean sales.
So the crucial takeaway here is that none of these pressures are happening in a vacuum. Trade, energy, finance, agriculture, they are all deeply interconnected. This is the polycrisis in action. A crisis in one area just makes the others worse.
And this really leaves us with a critical question for the future, doesn't it? In a world that is this interconnected, how do you even begin to prepare for a crisis that doesn't come from just one place, but seems to be coming from everywhere, all at the same time?
Thanks so much for watching this video. If you found this breakdown valuable, don't forget to subscribe to Finance Deep Dive. It really does motivate us to keep posting this content. We'll see you next time.